Kitco News is broadcasting from the McEwen Gala during the PDAC here in Toronto, and joining me once again are my two very good friends, Mickey Phelps of the Mercenary Geologist and Brett Cook of Exploration Insights.
Hey.
Gentlemen, welcome. Cheers.
Cheers.
And first of all, Mickey, I just want to say I brought some backup for you this time.
Well, the newsletter writer business can be kind of dangerous, so we got some security behind us this time.
But your nose is okay, Mickey?
Well, it was merely a flesh wound, Daniela.
All right, gentlemen. So I want to start by asking you how you found the PDAC this year. Brett, how was it for you?
You know, it's literally overwhelming. There's, what, 30-odd thousand people here. There must be 1,000 companies displaying down there in the booth. And every one of them, this is what surprises me, every one of them has the next big discovery. It's just stunning.
Fantastic. How about for you, Mickey?
Well, and so Brent brings up a good point. Every one of them has the next big thing. They've got this story, but we know of the 1,000 or so that are here, maybe 5% of those will actually succeed.
Right.
So 50 of those will execute a business plan and reward their shareholders ultimately.
Would you say there's too many players on the field right now, Brett?
That's a serious problem. In the junior sector, there are way too many companies. And the fact is, there are very few good deposits in the world. I got a study the other day that shows that to find a Tier 1 mineral deposit, to find and develop one, takes about $2.6 billion as an industry average. And a Tier 2 is about $1.2 billion. What that tells you is that if you're average or below, you might as well go fishing.
Right. Now, Mickey, was there anything you heard during this PDAC that shocked or surprised you?
I don't think I've found anything that shocked and surprised me. But what I'm concerned about is the ability for juniors to access capital. And that may have to do with the global financial situation, especially in Europe. But it's hard for juniors to raise money right now, especially for big CapEx projects.
All right, gentlemen, let's talk gold stocks now. Very popular question amongst our viewers, and we actually have a survey on Kitco right now where we ask people if they feel that gold stocks will perform better in 2012. Brett, what's your sentiment?
Very selectively. Overall, I think they're going to do pretty poor. Yeah, I do.
Mickey?
The cream always rises to the top, so I think select companies will do very well, and those will be the few advanced explorers and the small miners that have economic deposits. The others are going to suffer, I think.
That's a good point. If you've got a legitimate discovery or legitimate, property, you're going to do well. But if you're just average or below average, and you're sitting there with $1, $2, $3 million in the bank and a budget of $3 million, you're dead. You're toast.
Okay, but Brett, what kind of landscape do you need in order for gold stocks to perform well?
We've had it the past 10 years. It's rather frustrating.
But what kind of landscape would you need? Like for gold to be at a higher price, for the stock market to be performing well, what's needed?
I think the U.S. economy has to do well, and I think that'll limit gold's upside. But if people feel safe, feel like they can invest in these things, that'll help us a lot. But people aren't feeling that. I think it's going to be another really, really tough year.
Mickey?
Well, so I would go along with what Brent says, but really when the major markets do well, then people feel better about their investments and they'll tend to go into higher risk speculative plays. So we're very tied into the gold price in this business. For example, the gold price was up in January. Junior stocks, the index was up 12%. Gold underperformed in February. The index was only up 2%. So we're very much tied into the major markets, I think.
You know what's funny about that? Most of these junior companies, 90% of them, don't have any gold. The fact that the gold price goes up or down shouldn't make it any difference, because if they find something, it's 5-10 years before it goes in production. So it doesn't make much sense.
That's a really, really good point, Brett.
Yeah, and so that all has to do with market psychology. And most people, especially retail investors, trade on emotion and they go from this thing of euphoria to panic to greed to dysfunctionalism, whatever you want to call it. So the key to being a successful speculator in this business, I think, is to trade without emotion.
Brett, you have the last word.
Trade the volatility. If you know a company's good, buy it when everybody else doesn't want it and the gold price is down. Because if you're looking 5 years out at a decent gold price, buy it when it's cheap.
Fantastic, gentlemen. What a great segment. Thank you once again. We'll see each other. We don't know when yet.
We don't know when yet.
Yeah. But we'll be back. We'll be back.
Yeah, absolutely.
Thank you for watching Kitco News. You can email me, as always, at newsfeedback@kitco.com. Reporting from this wonderful party, I'm Daniela Cambone.